Hi everyone, this is Tanner. I'm the CIO of DWS, and today I'll be talking about APIs, data, AI, and also how to leverage these things to build a solid commercial models. So, intersection of all these points is actually hyper-personalization. And hyper-personalization is already disrupting the market. What do I mean? There is no single individual who is not got used to the standards of hyper-personalization via YouTube or Netflix or Instagram. And these people are not expecting less from their financial institutions. To be able to create a hyper-personalization, it's actually simple with few ingredients, which is offering the right product to the right customer at the right time through the right platform. And how to do that? Actually, when we look at the conversion funnels for the financial institutions, we see something very interesting. Through the traditional channels like phone banking or website visits or Google search, we see 3.5% of conversions out of the potential clients. 96.5 people are churning through this progress. But interestingly, 22% of these churn people are coming back to our products again, but through different platforms, through embedded platforms. And when we look at the size of this problem, it's $1 trillion market through this problem. And to be able to address this problem, there are three solid ways. One is, as a financial institution, you can become just a financial product provider. Or you can become a channel for the financial product providers. Or you have to build an ecosystem around of your organization, around of your financial offerings, so that you can actualize this opportunity. And how to do that? When we look at a traditional financial institution disruptive trajectory, we see that in this, probably most of you is familiar with the Innovator's Dilemma book, but market disruption mostly starts from the low end of the market, which is the least profitable of the client. And the fintechs or the disruptors are coming through this segment of the market, and you suddenly start seeing them into your competitive trajectory. This is the same for traditional financial institutions too, but something is different. Also, when we look at the wannabes, which are the most profitable clients, like telco or real estates or automotive, we see that also these big wannabes are trying to offer their own financial products and services, which means that the market is also getting more and more narrow. To be able to actualize this opportunity and defend as a traditional financial institution to this disruptive strategy, you have to build an integrated ecosystem together by leveraging the data. But how we can do it? One of the ways is, of course, the APIs. Probably you heard a lot about APIs today in also different sessions as well. So what is API? Actually, simply API definition is also changing with the modern API platforms. In the old times, with those verticals, we were identifying API product as a microservice which is exposing some functionalities. But right now, with the modern API technologies, like Google APG, WSO2, or whatever technology you use, you can use API resources of multiple API products to abstract new API products out of it. I know it sounds technical, sounds confusing, but what does it mean? It means that everything that you build around of the APIs are your building blocks. And you have to design your building blocks according to market needs so that you can abstract your building blocks by the need of your clients or changing market needs. But besides of this functionality, what else do we need? We also need to leverage the data out of it. But this data is not only first-party data. This data is customer data together with fintechs, third parties, and also our web, mobile interfaces, every small bits and pieces of the data to be able to create microsegmentations. These microsegmentations are the key ingredients for hyperpersonalization experience. And this data is not only part of your first-party tools. This is also ecosystem data plus your third-party solutions, like your fintechs or your ERP solution or your accounting, treasury, and so on. And when we look at this landscape, we see that for different customer types, there are many different players into the market which are not only financial service providers, but also your technology providers, or your clients, or your partners, or distribution channels as well. Now, you have functionality, you have data, now it's time to cook all these things together. How you can do that? Probably also another terminology that you heard a lot today is AI. Not only generative AI and agentic AI, but AI itself. Enabling AI to be able to predict or offer the right product to the right customer at the right time through the right channel. To be able to do that, I'm going to give you an example on how you can activate hyperpersonalization through your AI-driven or data-driven organization. First, starting with the intelligent systems. What does it mean? I'm Tana, and I need, imagine I am an SME or a corporate, and what I need is, I need a loan. And to be able to get this loan, what my financial institution has is my financial account. And in this account, the most primitive and the basic information that you can see is incoming money, outgoing money. And Tanner needs a loan, and this is the cash flow of Tanner. How much money can I borrow of Tanner? This is an intelligent system. And in the onboarding process or origination process of this loan, during the origination, if I start filling some forms about my institution, about how am I going to use this loan for machinery or asset investment or whatever, then this loan or this application can be more personalized, and the financial institution can come up with more tailor-made offers or tailor-made options for this SME or for this corporate. Now, how we can make this personalized offer hyper-personalized? To be able to do that, imagine I enable Tanner to connect his ERP system, his accounting system, personnel system, or treasury data, and everything together, that I can enable AI to predict the cash flow of Tanner from his account receivables or account payables, and all these kind of different discipline of information. Then I can come up with extreme hyper-personalized offers for Tanner's need. And even beyond, I can proactively offer some loans or financial products to Tanner to ensure that, his financial health and his cash flow prediction is well considered, and I know when is he going to be out of cash or out of liquidity, and when he will need the right financial product. Now, this thing looks great, but the world is even going beyond of it. Probably another terminology that we heard a lot nowadays, in all over the world is agentic AI. Agentic AI assistant stuff. So what do I mean? Imagine also as his financial institution, I am offering CFO as a service to Tanner, and Tanner knows that what kind of financial decisions will make what kind of financial impacts in his organization, And would that make sense to use liquidity at this moment to grow his organization, or continue to stay stable with his existing liquidity by considering different aspects to find his most optimal growth pattern, which is complete advisory or assistance services for his organization's goal, which can be growth or financial sustainability or opening to any market, whatever it is. Today, my example is like that. I will be around, and I'm really looking forward to hearing your questions in case if you are around. But all this financial hyper-personalization is actually one thing, which is creating an experience. And people may forget what you say, but they will never forget how you make them feel. So that's why data, functionality, and hyper-personalization is gonna be more and more common thing that we will be hearing in next days. Thank you so much for your time.